Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. The M&A market has bounced back in the last year, a little, with the highest number of deals recorded in over a decade, and the next 12 months are looking promising. We speak every year at this time to Sandy Mack, Head of Corporate at Corrs Chambers Westgarth, when the independent law firm releases its M&A report. Sandy, welcome back to Fear and Greed.
Thank you very much for having me again, Sean.
Why are we seeing more M&A activity, and where is it?
Look, our survey is a public M&A survey, so I should be very clear about that, because the statistics that we are recording where we have seen the elevated levels of activity have largely been in what we call takeovers in that listed company market. And the sectors in which we have seen this elevated level of activity have been largely in the energy and resources space, and quite a few deals in that tech space as well. I'm not sure that if you were to ask market practitioners across the board whether they felt very, very busy throughout all of last year, when you take into account both public as well as private transactions, it probably wasn't the bumper year that most deal makers would be hoping for. But activity levels were pretty consistent and it was pretty healthy. So I think our prediction for next year is that that will continue and possibly even increase.
Okay, so we're talking about tech companies and mining resource companies generally. It's pretty much at that lower end, that smaller end. Are we talking like kind of the deals of 10 millions, hundreds of millions of dollars, as opposed to the billions of dollars?
They were kind of in the hundreds of millions of dollars. Our survey always takes into account deals of $25 million or more only. We didn't have what we call last year the Newcrest effect, where we had one or two really big deals to skew the numbers. So this year, the values kind of came back to what I see as more normal levels, if inverted commas. But if you look at the private M&A market and you look at AirTrunk, which is in that tech space, and you include that in the statistics, you come back up to really elevated levels again. So overall, I think it has been busy. We have seen some very large transactions, and they have been largely concentrated in that energy and resources as well as tech space.
Okay, so why are we seeing the activity we're seeing at the moment? Is it about people being more used to the macro environment? Is it about boards finding that post-COVID, post the world settling down, they've got more cash on their hands? Is it about the opportunity? What are the reasons?
Look, I think people have just decided they cannot sit on their hands any longer to wait for deals to happen, and they've got to go out and do them and make them happen. So we're seeing a lot of companies out there that need to grow in various ways, and that includes through M&A and bolt-on acquisitions, and they've decided to come to market. I think interest rate stabilizing absolutely does help. What M&A does not like is volatility and uncertainty. And so deal makers are beginning to take their cues from the markets from the US, and having observed a degree of stability in inflation and interest rates, have decided now it's time to get back into the market.
Now, mostly this has been in the public sector. This has been in the smaller end. Do you expect it will flow through to the larger end? Having said that, in recent times, we've seen Emcor, the packaging group, make a bid for a US company. Now, it's a New York Stock Exchange listed, used to be Australian, so I'm not sure how that fits into the whole game plan. But do you think that the flow on from these smaller sort of tens, hundreds of millions will reach the top 50?
I do. I think that there is opportunity for some quite large ticket transactions in the coming year. And certainly I think that is not just in the public listed space, but also in the private M&A space. And we're anecdotally seeing a lot of sales processes coming to market for transactions that have quite large transaction values. So my prediction is next year is going to be a very strong year, not just in terms of number of deals, but also in terms of the value of the deals.
So why is that?
Again, I think it's a function of market participants getting more comfortable with the dynamics in the market and the need to grow, being able to get the debt funding that they need, and being able to determine where growth opportunities lie. The biggest risk that we still have in deal execution is still that delta between buyers and sellers in terms of value. There's still a bit of a gulf. I won't lie. There's there are quite a number of hostile transactions this year in our survey as well. Hostile transactions usually indicate some kind of delta between buyer and seller's views on value. And there were some specific reasons for why some of those deals occurred. But largely speaking, when you can't get agreement or you don't see eye to eye with a target on price, bidders are prepared to go hostile. And that's because they're not willing to sit around and wait for things to happen anymore.
Okay. I mean, there have been in that end of the market, there's been some really long-running takeover battles over the past 12 months or so. You mentioned Newcrest or the Newmont effect before. That was an overseas buyer taking out an Australian company. Are we seeing offshore companies buying local assets? Like well, obviously that was a big one.
Yeah, so we acted for Saint-Gobain, the French industrials company that bought CSR, and one of the trends that we saw this year, if you like, is this number of industrial companies that were taken private, and they include Boral and Adbri. So we absolutely saw the influx of foreign bidders coming back, and our statistics show that for the first time in about 5 years, foreign bidders exceeded Australian bidders. Now, a large part of that was during the COVID period. It was difficult to do deals when you couldn't fly into the country and have a look at the asset to management, etc. The kinds of deals that got done by foreign bidders in that period were limited, and they were limited to transactions where you already knew the asset. For example, we acted for Coca-Cola, Europe Pacific Partners, who bought Coca-Cola Amatil, so there was a relationship already. This year, what we are seeing is that foreign bidders are coming back in force, and they are participating in processes. They are bidding for assets. There is a real exchange rate advantage to be had in some jurisdictions as well. But interestingly, the jurisdiction that was most active was actually the Asia-Pacific region, which we haven't seen in a long time. In particular, Japan was very active, and it's the outward focus that the Japanese have at the moment on a variety of transactions, including in the tech space. I think that has made the difference.
Stay with me, Sandy. We'll be back in a minute. My guest this morning is Sandy Mack, Head of Corporate at Corrs Chambers Westgarth. What about the super funds? For years, we've been talking about the super funds hoovering up all sorts of assets. Is that still happening? But it sounds as if they've got some competition in the market at least.
Oh, look, they haven't featured in a significant way in this year's statistics, but they are still a player that you have to reckon with. If not necessarily as a bidder, then as a major stakeholder in transactions who have the ability to determine the outcome of significant deals. Brookfield Origin was a perfect case in point last year, where a superannuation fund took the view that they wanted the asset to remain listed and they were not prepared to accept a particular price. And increasingly, I think we are going to see not just super funds, but also shareholder activists play a really significant role in the outcomes of an M&A transaction.
And that's a good thing, isn't it, Sandy?
Oh, look, I think it's great for transactional opportunities. I think it's a very exciting time. It's probably causing some listed boards a bit of a headache in terms of how they manage a stakeholder base. But overall, I think it makes for a much more dynamic and interesting M&A environment.
Okay. So the next 12 months or so, you're confident that these deals will keep flowing. What could get in the way of them? And I suppose I'm heading towards a Trump administration or something like that. But what is it that could stop it?
Yes, I'm not a political analyst or commentator.
So appreciate that.
Take this with a grain of salt. But again, like I said at the beginning, M&A hates uncertainty.
Yeah.
So I think the US is back. I read a quote somewhere, back in the business of doing business.
Mm-hmm.
But where I think the handbrakes might come in is if there is, if certain policy decisions then impact external factors. For example, tariffs, geopolitical instability, all of those sorts of things have a knock-on effect for other jurisdictions outside of the US. And if that then leads to rising inflation and again, interest rates go up and there is a degree of uncertainty about where we're headed, then I think that's what's likely to slow us down a bit.
Are there any sectors that you think are likely to be busier than others?
I think that energy transition sector is going to continue really strongly. We think that lithium's probably sort of come off the boil a little bit. We saw quite a few lithium transactions last year. And this year we did act for Azure on the takeover by SQM and Hancock. But I'm not sure that those transactions are going to continue for anymore just because of lithium pricing. We think we'll see more consolidation in gold, just in terms of growth and synergies, and possibly also copper. But very much, anything that is adjacent to energy transition will continue. as an active sector. And I think tech will continue. I am hopeful that healthcare is going to come back as well because it's a particular passion of mine.
Right.
I have thought that it might come up again strongly this year. We haven't seen that play out quite in the same way, but I understand that there are a bunch of private processes in the background, and you might get to see a little bit more activity in that sector, in the private M&A space.
One final question, which is a little bit left field. We talk about deals all the time and, scrip offers and cash plus shares. Are they more complex now than they used to be or not?
I think they are more complex. And I think it is, again, when you have the delta between buyers and sellers in terms of value, you've got to find a way of bridging value. And to do that, you use more complex structures and more innovative sort of thinking around consideration and what you can offer to shareholders. So, overall, I think there's a bit more complexity, which makes it more fun for us.
Indeed it does. Sandy, thank you for talking to Fear and Greed.
Thank you very much, Sean.
That was Sandy Mack, Head of Corporate at Corrs Chambers Westgarth. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.